what's up everybody? It's Omar. It is August 21st, 2018, 7 p.m. and I wanted to make a video building a watch list for tomorrow and just talk about, strategy quickly and a couple of, just mapping support and resistance. Eventually, when I get back to like trading like I was before, I got one big project at work that I got to complete, and I leave on vacation next week. But September to me is where it starts ramping up, and I'll be ramping up with it, God willing. And I'll be making more videos already with my watch list built, and then just showing you what I'm looking at for the following day. But right now I'm just for whatever reason I'm getting a lot of new followers. So every time I feel like I'm ready to like just completely get off social media, I don't know, people give me a reason to just stay on. So as long as the momentum's there, I'll keep doing this. You guys saw, what happens is in the morning I get up very early. Like tomorrow I start work really early, so I'll be up extra early, like 4 in the morning, 3 in the morning. And if I see something, I'll call it out. So I always try to drop a gem online for you guys. And I talked about not PETQ. I'm sorry. I said, watch out for wheat stocks because they seem to be moving. And on Twitter, I posted, let's look to see if CGC can test 40 today, right? And I put it on Twitter. Let's see if I can find it. And I posted it on Twitter today, just so you guys can see. And I'll move fast. I'll try not to make this video too long. But what I said was, I said, this is what I originally put. I said, here it is. Sorry. CGC, all eyes will see if this can attempt to reach 40. Remember, if it does, right? Because people always ask me like, what do I think is gonna happen? Like, my answer is always gonna be, I have no fucking clue, because who the hell knows what any stock is gonna do, right? But that's why I put if it does, because I don't know what a stock is gonna do, right? If it does reach 40, don't buy the breakout. Let it wait. Let the breakout happen, right? Wait for the pullback to test the breakout level, and if resistance comes back, then you buy. Don't fall for the Sykes Ross BS, because the reason why I do that, and no disrespect to Sykes or Ross, I've learned a tremendous amount about stock trading watching those YouTube videos initially. That's the whole reason why I got started in the game. But when they talk about, they don't really focus on technical analysis at all, especially Sykes. Sykes just keeps things real simple, and he's real animated, and he's more of a marketer than really a real strong teacher in terms of like teaching people how to buy and sell stocks. So he'll say buy the breakout, short the breakdown. That's what he says over and over again. Oh, this stock broke out here. Not really going into details about like breakouts and fake outs and when is the confirmation to buy. Ross teaches people when a stock breaks out, just buy the breakout, and it's just a terrible strategy. You're gonna lose all your money. So what I always teach people, what I always tell people, that if a stock is ready to hit a new high, a new breakout level, right? What you want to do is you want to let the breakout happen, and then you want to see it pull back and then either form a higher low or test that breakout level and then buy. That's what the smart buyers do. Sometimes the stock will break out, pull back below it, and like kind of do this like U shape, then break out, then pull back, and then rip, so you see that happening. But most times this is what happened today, where it's a fake out. It breaks out momentarily, and the rookies jump in, and the gamblers jump in, and the not very good traders jump in, and they chase. But what happens is they get crushed because everybody's selling into that spike, and then you get the reversal. Now this would have been an amazing short to risk off of, especially once you get this pop, right? So I'm always talking about support and resistance. Now this is a 1 minute time frame. If you notice here, look what happens right in here. You see the pops, right? You see the pops. This is like a little support level at 39.74. Look, boom, 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 can't break it, and then boom. So people who are really good at technical analysis, who really understand support and resistance, would use this opportunity to short, and they would risking 40 or even the higher day. And this is a perfect opportunity to go short, because you're seeing that it's testing that little support level here that it can't break. And sure enough, the stock tanks, and it pulled back. Where did it pull back to? I always talk about this in my videos too. Let me pull it back here. It pulled back to just about the previous breakout level. All right, it pulled back just to the breakout level, bounced off this previous breakout level, and then get the bounce. And I always talk about that too. When you get that big sell-off, so when you get the big sell-off, you're always gonna get that bounce, you know. So you see how it gaps down, and then you get that bounce, then you get the pullback, and it pulled back to a previous level here that I mapped. All right, and that's this level of support that I had mapped right here. And then you got a little bounce, you know, and now it's fading more into the after hours, you know. So it's consolidating. So it closed weak, which you know, it's still green, but it's closing weak, which tells me that tomorrow it may test this level again and get rejected and then pull back. You know, maybe it's not ready to hit the 40. Remember, last time it touched 40, it came all the way down to $29. You know. So, you know, there's not necessarily saying that it's going to run, but you should definitely keep an eye on this. But this could be a potentially good short, because if it tomorrow, let me just put 1 day, 1 minute, because if tomorrow the stock, you know, gets to this level, spikes, and get rejected into like a consolidation level, like right around this level, you can go short risking off that level, because it may just pull back, you know. And that's how I like to trade. I like to trade off support and resistance. So I would look at this stock again for tomorrow, and just to show you how I do it, right? So I always like to go 30 days, 15 minutes. I'm gonna remove this just so you can see how I do it. So we're gonna start right. $40 is obviously a key level, right? Because this is the previous high right here. So we'll put 40, 26, and 40 because those numbers matter. So 40, 40, 26, and then 40. And you guys get the point, because sometimes I gotta mess with this. So sometimes I gotta do this and then edit, and then do 40. All right, so if we're looking at it where the pivots are, right? So right here is a pivot point, so that's gonna matter. This is a pivot point, so that's gonna matter. There's a lot of consolidation here, and then it kind of gapped up here, right here, and then failed, right? So it came right about this level. So this is the level I would be looking at tomorrow, this 38.75 level. 38.75, 38, 76, like in that range right there. What does it say here? 38.75. If it spikes and gets rejected here, you could see a nice little fade tomorrow, you know. And I would be looking to potentially cover right at that 37.26 level. But if it can't hold it, then you know it could fade further, you know. So what you want to do is you want to map where the support and resistance is below that, right? So I would map some right here. This was a pivot point, so I would map this, and this was a breakout level. So for me personally, I would map it just because this was a actually right here, I'm sorry, I would map this right here because this is another pivot point. So you see how I'm mapping it? I'm mapping it based off those pivot points of support and resistance, you know. And then if I went further, this would matter to me here because this is where it found some support, and you know, and then this is like easy areas. I would have to look at it in a little more detail, but I would map this, I would map this. This is an area too where it kind of bounced off, so I would do that, and then it pulled back here, so I would map this, I would map this, and this is all on 15-minute time frame. So it's a pretty good, these are pretty good indicators of support and resistance because they're based off 15-minute time frames. And then what I also do is once I do that, you know, that's kind of far off. Then sometimes I'll go look at the 5-minute time frame to see if there's any other areas that weren't clearly identified in a 15-minute time frame, and then I could potentially map those too. But these are good areas that I would work off. Oh, I also want to map this area because this was the previous day's high. That is a very important area of support, so to map. All right, and then you know you can zoom in and then look at it and make sure it's the right number. And sometimes I get real crazy with it. I make sure like it's to the cent. And you see, I mean, if you follow me on Twitter, you see that I'm like a lot of times I post charts deadly accurate to the cent. People are like, how the hell are you doing this? And I'm like, dude, I'm just mapping support and resistance. Because people overthink this. They think they need indicators and all this stuff. One of the things that I've learned, right, over my 2 years of trading, is that all the traders that make a lot of money, none of them use indicators other than maybe VWAP. None of them use indicators. That's the one thing I learned, and I couldn't understand, like, what are they doing? Like, how they're not doing this with RSI and MACD and all these moving average lines and all that. And really, it's they're making trades based off support and resistance and price action. That's it. That's it. You got to keep it simple. You don't want to clutter you don't, because all those things will impact your ability to make a trade. You start relying on the indicators and not the price action, you know, and that's all it is, you know. So here, let me make a watch list for tomorrow. I'll put like 6 stocks on there. So we'll say I'll be teaching while the market is open, so I definitely won't be watching. But you know, I'll check my phone from time to time, see who's posting, see what's what. So CGC, I still would put on my watch list tomorrow. Okay, so that's one stock. And again, the way you can look at this, again, I said it in 20,000 videos, but you can always go to FinViz, and you can always, you know, go to all. And once you're in finviz.com, and then you can figure out what like percentage you want to do. So let's say I want to look at stocks, let's say 5%, up 5%. I'll start with that, with over 1 million shares traded. And then what I do is I go to like charts, and then I hit on candle right here, and then I just look for the charts, and I look for stocks that like finish strong. Like CTRL is a stock that I would look at just because that had a strong candle. Or sometimes I look for stocks that you know, started strong but closed weak, because then I'm looking for a spike and a rejection to go short. You know, like IVAC is not sure what direction it may want to go in. PINC, these are stocks that I would look at, you know, looking at all the charts, you know. And then, you know, so I'll just pull up one of these. So let's say I look up at CTRL, had a big strong green day, right? So I'm going to type CTRL, right? CTRL. And this thing had a monster move, right? It went from 30, well, not, you know, a monster move, but it finished up 8%, but still 3 points, which is nice, right? So let's say I go back 30 days and 15 minutes. Over the last 30 days, it hasn't been up in this range. So I go a little further back. Let's say 180 days. Yeah, 180 days on the 4-minute time frame. This was the last time this was up here. So I'm looking at this, and just because this seems to look, is on both days, both times this hit this. So that seems to be an area. 3408 seems to be an area of potential support. It says 3404 here, 3408, 3404. So in that range, I'll just map that real quick. But let's say I do the 30-day, 15-minute just to see where it's at currently. So I want to see, did it react to it? Not really. Didn't really have any real reaction. But what I would do is, okay, I would map the high here, right? And I would map the 38.49. And then I would map this support level here, right? Because this is where it kind of hit the low, and then it took off running here. And then, you know, I had some right here, it bounced off here, took off running, and this was a low. And let me do like 5 minutes just to see. Yeah, this thing just, there was hardly any pullbacks. This thing just rip, squeeze, and just kept going. I mean, there was really no pullbacks. So I'll use the 5 minute. It gives me an easier, clearer picture of where the pullback was. So this is the consolidation level. So this 34.67 level to me would be an important level, because there's a lot of support here. So if it pulls back at the open, holds, this may be a potential area to go long. But remember, all this can, you know, there is consolidation here. But I could see it potentially going back up to that 35.28, which, you know, is not bad. You know, so 78.90, about 60 cents. And that's sort of kind of how I look at these, and sometimes I'll map them. And then, you know, you want to go back like a year or 5 years just to see where the overhead resistance is. And it's, look at this, it's approaching that high. All right, yeah, so 35.99 is the high. So yeah, so this is a stock I would look at just to see if it gets there. And guess what I think it'll do? It'll do what CGC did today. It would attempt that. It would attempt to break out and then probably get faked out, and then, you know, you could take a nice short off it. So, but it seems to be moving in the right direction. So it's close. It's close to that yearly high. So keep an eye on it. See how it reacts. So there's nothing wrong with putting a stock on a watch list. What I love about Thinkorswim is that you can like have multiple charts, like I do with this, so I can track multiple stocks, you know. And then what I usually do is I set alerts so that if a stock hits a key level, the thinkorswim will alert me, and then I can potentially make a trade. So there's nothing wrong with putting a stock on a watch list. You know, a lot of times I put stocks on a watch list and then something's moving pre-market that's just so easy to trade that I can't resist, and I'll take a trade there. So it just really depends. But now I have my support and resistance levels mapped to potentially see what it's going to do. Like if it pulls back and holds this 34.67, that's going to tell me that it's probably, you know, going to pull back, hold, keep going. But if it can't hold this, even though these are other levels of potential support where it can bounce off of, it's going to tell me that maybe it's going to, you know, pull back some, and eventually will bounce. So I may, you know, cover any one of these. Maybe I test to see how it reacts here, and I hold to see if it bounces and then gets rejected and then keeps going down, you know. So it just really depends on the price action. You got to watch the stock, you know. I'm just putting this here just to show you how I do this. But if I'm really looking at stocks, this is the biggest percentage gainers. CRN is a stock that actually I was looking at yesterday. I build sometimes my own watch list. I don't post it all the time. I just got a lot going on, so I haven't been as active as I usually am. But let's talk about CRN. So CRN today is what, the 21st. So this was moving pre-market. So you guys know how I tell you, in pre-market you want to map your support and resistance. So if I was watching this pre-market and I see the price action, right, I'm mapping support and resistance. So I see right here, that's the high. This is the pivot point. I would map this as well, because that, and I would map all these levels just so I know. And then what happens is, and then, you know, it starts squeezing, and right before the market opens it hits this high, and then it pulls back and it holds this area. So I would map these, and I do it for me just for because it's like an anchor. It just helps me. So had I seen this stock and the market open, so let's say I'm watching these levels and I'm watching, okay, let me see how the stock's going to react. So if I see that the market opens, it gives you this wick and it pulls back. This is what happened. I'll show you exactly what happened. Shorts saw this open and they see that it's this indecision candle, and they see this here. So they're shorting, risking off this. What happened was it found support right here, right. This was where it held a high pre-market at around 816, and then what happened was buyers come in risking off this level. Short sellers are like, fuck, this shit is going up, it's going to squeeze me out, and they're covering, and that's what causes the massive spike. So that the stock spikes at that 878 level. Now, what I like to do, me personally, is when I see something like this fall back and tank, I'm looking for the bounce. So usually what happens is with these low floaters, what happens is usually get a first bounce and then a second bounce. Usually that second bounce is the bounce where you get the move back up pretty big. It didn't happen here, but look what happened. You got the double, sort of a double bottom. I mean, this was it, but you can see how it gapped up, found some support here, gapped up, it found here, and then it kind of dipped below, and then it just kind of went back up. So right in here, me personally, had I saw this, because I see this squeezing, and it's kind of like consolidating here, I might have, me personally, this is how I like to buy dips. I would have went in here risking, once I saw it break above this area, I would have went long risking this. And people say, well, how you not losing so big? Because if it would have went against me, I'm out. I'm just taking my loss, a small one. That's how you do it. And then your losses are small. But if I see this running in my direction, I'm gonna take this long. Now, it doesn't seem like much, but there's so much volume here that on a stock like this, $8, I can go, usually, you know, I don't go like, you know, crazy big. I go like 5,000 shares or something like that. And 5,000 shares, and let's say I would have gotten here, and more than likely I would have been covering right in here, because this is the area where it consolidated, you know. So let's say I got in here and got out here, that's what, like 30 cents, and that's like $1,500. So that's how fast you can make $1,500, you know. And that's sort of how I do it, you know, when I buy dips. And if you notice, the stock double tops here, and you know, people probably went short right there, risking off that. But now it's consolidating. So you know, we have these support and resistance levels. I would map this as well because it double topped here. So what I would be looking to see tomorrow is, first off, right, I'm gonna look, if we look at the daily, meaning 1 year, this stock has a gap to fill. It didn't, you see right here at 767, it got to a low of 772, so it was like one of those partial gap fills. So it could potentially completely fill the gap tomorrow and then bounce. I see it happen a lot where the stock will then come all the way down and it will fill the gap, and then it would just continue higher. Now what I would be looking to see tomorrow is, all right, maybe this thing starts fading pre-market, it pops, it gets to like this consolidation level and then gets rejected and then fades, you know. And then what you want to do is, if you think that's going to happen, you're going to say, okay, where is the support levels below this so I can potentially cover if the stock, if I take a short. So obviously this is one level here, right, and this is right here where this is kind of where it kind of bounced, and then it bounced here, so you can see how it kept up and then it bounced up here. So these levels to me, as you can see, now this is the previous breakout below, so I mapped this as well. So these levels to me are potential levels that I would cover if I went short based off of a rejection, and then it fades. That's what the traders do. That's what the traders do. Now this traded 31 million shares today, so it's gonna take a lot of volume if it dips below to break above it and keep going up, you know. And its average is 2 million shares, so you know it moved a lot. And if we look at the daily, let's see. It's traded on this day, it traded 3 million shares, this day 13 million and 31 million. So you know the volumes continue to increase, you know, so we'll see what happens. But it has this pin bar, it doesn't know which direction it wants to go in, so that could potentially mean that this stock is ready to have a red day tomorrow. Usually I'll know if it's gonna be a red day, like there's never a guarantee, but if the stock would have closed weaker, like if it would have closed down here in this $7 area, when you see it trending this way like this, a stock that gaps up and it starts off really big but closes like this, usually means the next day is going to be the first red day. But we don't know yet because this kind of consolidated sideways, and there's some, you know, it's kind of falling a little bit post market, but we don't know, so we'll see. So you keep an eye on it, you know. So I'll put CRN on the watch list. And then what I'm doing is I'm filtering by, this is like the most volume traded for today, and then I just look for stocks that I like, you know. CVSI is a stock that I wouldn't be surprised if this found its way back up to $9. I talked about this yesterday. I was telling everybody expect a dip off the panic. Now let me clear this out for you guys. Let me just clear it. All right, I'm gonna hold myself honest. I'm gonna keep this video up to 5 minutes more and then end it. I don't want to make it too long. So now Tim Sykes will tell you that when a stock dips like this, like he calls them panics and they bounce, this happens on any type of stock. Like I'll give you an example. When a stock has a crazy sell-off, you're gonna get a bounce. And if you don't believe me, I remember, and I'll tell you because I made a ton of money doing this with Facebook earlier this year. So let me go 90 days. Let me see if I can find it. Let's see, it's gonna be so Facebook, back when it was getting down to like that 150 level. All right, so here's Facebook. Facebook had this massive panic, right? It went from 192, then it bounced back up from 190, from 194 back up to 202. Then it panicked from 164 all the way to 181. That's what, 74, almost 20 points. So when you get massive panics, you're always gonna get a bounce. It doesn't matter whether it's a high listed stock or shitty low cap, low float penny stock. Don't listen to Tim Sykes and have you believe that it's just that. These big market cap stocks do the same thing too. You don't get the clean, you know, the difference is with a penny stock, it's like much cleaner. When you get the panic, it's super clean. That Facebook was just almost it was as clean as this. It's not normally as clean as this, but you get those big sell-offs. So I was telling everybody, look for a dip buy once it panicked. So I had my support and resistance level mapped, and originally what I had told everybody was once it started panicking, was for a potential dip, but I thought potentially it may bounce here only because this was the previous day's high. That's what I you know, thought, you know, that it could bounce off, but it didn't do that. It just kept fading. Now I had support, so what I do is when I map my support and resistance levels, I just leave them on the charts. I never like erase them, because sometimes they serve me well when stocks fall or go above. And you know, I have them mapped. They serve me really well. So this stock continued to tank. What you gotta do is you gotta, with these kind of sell-offs, you always want to look at level 2 and the time and sales. You want to see, you know, green prints coming in and green candles starting. I have these. I was messing around with this. I changed this white just because I'm bored, but I'll change it. I'll change it green just so. Oops. Just so it makes more sense to everybody. Yeah, so you get those. So what I like to do is, you know, when I see this, I'm like, okay, the stock is panicking. Where's their support? Where's their support? So me, I would have been immediately, once I saw it break down here, I say, all right, what's the next level? So I would have mapped this, and then I would say, what's the next level? I would have mapped this right here because there's a lot of support. What's the next level? And then I would have said here, right? And then what's the next level? I see a bounce here, so I would have mapped this. I would have mapped this because this was a previous breakout level here, and then I would have mapped this because this is where it bounced. This is all on the 15-minute time frame, by the way. I would have mapped this level too. I would have mapped this level as well, and I would have mapped this level right here as well. All right, so these are the areas I would have mapped based off the support and resistance. So as it's selling off, I can say, okay, where's the potential level? And look, there's no accident that at some point where it bounced, look where it bounces at. You know, right around this level. It dipped below it momentarily, but once it broke above this, that was your, you know, your reason to go long. You know, and you know, I posted the screenshot with my previous support and resistance level map, and look, you know, this 531, if you look on the, if you look on the bigger time frame, oops, let me zoom out. All right, these are all levels. That's right. So even here, so when I had this mapped already, and a lot of people got in around this area and bought this, and I had this already mapped, so you could have shorted this if you had shares. But it's no accident that once you saw, when I see this and I see a massive sell-off and I see a level, a clear resistance level or support level, I'm sorry, then I can take a trade once I see the momentum shifting. Somebody else posted it on Twitter, and it was a good point he made. He said, hey, you know what I did was I went long as soon as I saw the second candle go green. Once I saw the second candle go green, I figured there was a momentum change, and I just went long, risking off the low, and that was good. But look what happens, guys. The stock gaps up, pulls back, and bounces literally right off that. It got to a low of 372, but right at that 374 level, which was the previous support level, and you know, this thing went all the way back up to 5. Now look what happened today. This is why I tell you I love shorting spikes. So like the stock spikes, it consolidated, it spiked, but it couldn't get past this level, and you know, it faded. It went from 580 to 505. Look at that. So 1,000 shares could have got you $800. Me, with a volume like this, I would have went in maybe 3,000 shares, and you know, let's say I got like 60 cents of that. That's like $1,800. You know, and the only reason why, and I would size more, to be honest with you. I'm just not sizing more because I'm with E-Trade, and I, you know, but if I had a direct market access broker that I could access at work, I'd be going, you know, 10,000 shares on some of these, because they're like gimmies, you know, and you can make a lot of money. So when you see these big traders making these big P&Ls, they're taking a lot of size. They're taking a lot of size, but that comes with a lot of stress and also with a lot of losses that they are not posting. So you know, you may follow somebody, they post 1 or 2 losses, you know, just to make it appear that they're, you know, being transparent. Trust me, they're taking much bigger losses that they are not posting, because you know, you have big losses. Like Steven Ducks always likes to post those big wins, but trust me, he's taking huge losses that he ain't posting. Trust me, he just wants to create the perception that he's always winning, And he wins a lot, but trust me, he loses a lot too. So I would be watching this tomorrow, and look, if it can get past 587, right, because it triple topped here and you have some support, this thing can get back all the way up to 6, potentially 650. Now there is some overhead resistance here, the 617 level, so you can get up here and it will get rejected. So you gotta pay attention to 6 and then 617. But because this is a big momentum shift area, I mean, I potentially can see it getting back up there. So definitely watch how it's gonna react tomorrow. But if it can't break this, expect a collapse. But I for some reason I seen this happened before with MGT. This happened with this happened with what's the others here, and then they just continue running. So I wouldn't be surprised this shit is back up tomorrow running more. So I'm gonna put this on the watch list. All right, and then just to review a couple of technical analysis stocks. So here, let me pull this here. I put the Steven Duck's criteria because like I had seen the video. It's the same thing. It's low float, but he looks at stocks with under 100 million market cap. So I just that's why I put the Steven Duck's criteria, because but it's the same. It's just low penny stocks basically. So let me look at a couple of these stocks. Let me let's go to oops. All right, so here TNXP is a perfect example that I talked about this the other day about how to trade these stocks. I told you that, and I specifically said, guys, if you watch my video the other day, I said when we're looking at stocks like this. Now let me I'll put 2 other stocks on my watch list and then I'll end the video. So just to remind you guys, when a stock is moving pre-market, you immediately want to make sure you map your support and resistance. All right, so what I like to do is, oops, I'm looking usually at a 2-minute time frame. So I map my top, right, to see where it's moving, right? I map the previous I gotta map was the previous high. So I'm looking at this and I'm saying, okay, these were the previous highs. So these things do matter to me. But when I'm looking at the stock here, I'm saying, okay, here's the high, here's where it consolidated, right? So here's where it consolidated. So this is, and then here's where it kind of bounced, right, and found its low, and then it's gapping up, and you see it found this, right? So now, right, the market opens. This is what happens. So the market opens, and the stock spikes, right? But it can't hold this level. So let's say you try to short it, right? Let's say you're trying to short the stock and you miss your entry. What you got to do is wait for that second bounce, because a lot of times what happens is the stock is going to pull back, it's going to find support, and then it's going to bounce again. And if it can't hold that level the second time, right in here is where you go short. Especially when you see a green candle, like you get a pop but it's not even attempting to get up, this is like your kill zone. Like you go short and you just risk off the previous resistance level, and all I'm doing is mapping those key support and resistance levels, all right, to basically go long and short. And that is how you trade it. So remember, this is where I mapped, and that's where I got the 152 from. Okay, so, and it can't hold it, as you can see, it can't hold it. So right in here you go short and you just risk that, and this thing went from 150 to it found its support now here at this 128 level, 127 level. All right, so what I would have done is, if I would have went short, I absolutely would have been mapping previous support, and look where the support was, right here. This is a previous support level right here. So I would have mapped this, and I would have mapped this as potential levels to cover, and the way to do it, guys, is already, so like let's say I'm shorting a stock, I'm already got my, so if I'm shorting here, I already got my buy covers already set up, at a level where I think the stock is going to the support level. I'm thinking the stock is going to hit the next support level. So if I short it here, I know that my price target's here because this is where it pivoted, and if it can't hold this level, then I'm gonna go, I'm gonna stay in. So maybe let's say I have 5,000 shares, 2,500 shares I'm covering here, and I'm gonna see how it's gonna react if it bounces again, if it's gonna hold, because let's say it bounces up and it can't break this, then I just stay in, and I see if it reacts to this. If it can't hold this and breaks down, then I stay in. and then my next price target will be the next support level, which will be the next level low. I already got my shares ready to cover. That is how you get good executions, and that's how you make money in the stock market. One of the things these big traders do is they don't tell you is that, let's say they're going short. What they do is, as the stock is spiking, because they're risking off a result, they're already shorting as it's going up. You don't got the bankroll to do that. So that's why I feel bad for all these kids that go into a lot of these chat rooms with the big brokers, with the big traders, because they, you know, the way they trade, you can't correlate to that, because they trade with so much size. You know, they can hold through a lot of things that you can't hold through. Yeah, so you know, those are the things you got to think about. So that's how you know to go short. All right. Now, if the stock would have broke out and broke above this, and let's say pulled back and held here, then you can go long, risking off that. You know, that's how you do it. Let me see if I could find one. Here I would put on the watch list for tomorrow. This thing is, I think this is gonna attempt to get back up to 30 again. But here I have what, 1, 2, 3, 4 stocks. I'll put one stock that finished low. So another thing that I like to do is I like to look for stocks that close red. And let me see. Look, this is a stock that I've had previously. I didn't map this recently. This is old. Look, from a long time ago. Look how the stock's been bouncing off the support and resistance lines that I've mapped. I haven't even. This is probably. I probably did this back over here. This was probably back in well, I want to say probably around here. It's what I did back in May. And look, support and resistance. Let me see. So not these kind of charts. These are like, yeah, stocks that like really have big. So like, for example, all right, I take a stock like this, PLD. All right, stock trade 20 million shares today. Normally averages 3 million. What I would be doing is, right, I'm gonna put this on watch. Let's see how it reacts. You see how the stock. Let me put up the bigger chart. All right, and let's do 5-day, 15-minute. So what I'm gonna be doing, I love to see these big rips, because these big sell-offs, because you see how it just clearly bounces off this level. And what I do is, right, so I'll map here and I'll map this too, because it's kind of like right in this consolidation level, right? So I would map these levels, because these are key levels right here, right? So I'm mapping them, and I'm map the top here, right here. And what I want to do is really, especially more than anything else, is see how the stock will react to this level right here, because this is the pivot point. So what I normally do is, you know, I'll have a grid where I have a bunch of stocks that I'm watching at once. But let's say I can't watch the stock. What I literally do is I just create an alert. So I go here and I go create alert, withdrawing. Oh wow, look at that. That must be new, because you couldn't do that. So price level crosses, and I'll just put crosses, and I would say, you know, potential short. Or you don't even have to say anything. I could just do this, and then so what happens is, if the stock crosses above this level, it's gonna alert me, and then if it can't hold it, so let's say if it breaks above, it can't hold it, and breaks down, I'm gonna short it, because it's getting rejected. It's still not ready to break above this candle, and it's continuing to fade. And then what I gotta make sure is I gotta look back further and see. So let me do 30-day, 15-minute. I gotta look back and further and see, okay, where is the next support level below to potentially cover my short if I take a short. So here, right in here, this is some support here, and then here's some support here, and then, you know, and then you just map your other levels, you know. So I'm looking at here, and oops, yeah, and then here, and so on and so forth. So that way, if this stock does happen to spike tomorrow at the open, and it can't hold this level, guess what I'm gonna do? I'm gonna short, risking off it. So that's a pattern that I love to trade. Or if it breaks above, I go long. But I know that I'm also thinking about shorting, because at some point it's gonna gap up and it's gonna get rejected into one of these levels above. It's very seldom that a stock just goes all the way back up, right? It's gonna find one of these levels, and then one of these levels is gonna pull back, and you get so much range with these higher price stocks, and you don't have to take a lot of shares. Like 500 shares, you could get, you know, 1 point, you get $500, and these things go 1-2 points, you know. So, you know, so that's what I like to do. So I'm gonna put this on the watch list for tomorrow, and we'll see how it reacts. Sorry about that. So let's do that, PLD. All right, so that's it. That's what I'm gonna put on. Just so you know, guys, the other stock I do want to put on the watch list, PUDZ. This is dog shit, but I'm gonna tell you why I'm putting. I want you to think about trading this. Only small size. These OTCs, when they break out, yo, they run. They're shitty. They're hard to get executed, and you're taking a risk. So I'm putting full disclosure. I'm telling you straight up. But look at this stock. Look at this. Weed is running again, right? And I said where CGC goes, every other stock goes. So right, CGC spiked and then pulled back, right? And look what Buds did. All of them did. So if tomorrow CGC breaks 40, expect all these weed stocks, every single weed stock you could think of is gonna run more than likely. But what I want to show you is, look at this. I traded this before. I made a fucking ton going long on this stock. When everybody told me, "Oh, you're crazy. It's a shitty, OTC." I'm like, dude, you don't understand. These things run. So look at last time this thing ran. I got a big piece of this. I got in at 6, and I held this all the way to 12. All right. So I got a nice move. But look at this. Every time this stock gets momentum, it starts moving, it's back up. So the pump is on again. It looks like the weed is on, the weed stock's up, and the pump is on again. Now this does have a gap to fill here at the high here of 350, so be careful. But there's a lot of consolidation here overhead, so this thing can get rejected and tank. But these stocks do have a habit of running. Now the thing about it, last time this thing ran, look at this, it had some support here, and it just blew through it. So be careful, but just keep in mind that this stock can potentially move, and it's been moving from 2 to 4. So what I'm gonna do is map that 419. Now remember, don't buy it if it breaks out. Remember, wait to see if it breaks out, pulls back and holds. And if you decide to trade this, and just make sure that you don't get in too big, because these stocks sometimes can be difficult getting executed. So just be careful. So I would be looking at these key levels only because weed is running. So as long as weed is running, this could run with it. So I would map these levels. So you see I'm remembering previous high, and I'm gonna map this. I don't think it's gonna get back down here, but even let's say it panics in the morning for whatever reason, look for a dip buy. Just like CVSI, this thing can just downs and then just keep going. So just keep an eye on it. I'm gonna put it on the watch list. Not to say that it's gonna keep moving higher. I'm not sure, but what does it hurt to put it on the watch list and see how it reacts? I'll map this as well just to see how it reacts. All right, so I'm gonna put BUDZ. All right, so this is the watch list for tomorrow. I'm gonna post this on now. Let me know what you think. Leave some comments, guys. What I'm teaching you guys in terms of like how to buy and sell long and short is the same thing you would learn in a chat room. So like, that douchebag Modern Rock who I called out on Twitter, if you go and you watch his videos, he's been posting videos, it's the same shit I've been telling you. Support and resistance, we're shorting into spikes, covering into previous support. That's what he does. That's what all these guys do. I called him out because I just thought he was very disingenuous, and a lot of these young people, worship him, and he launched the service and he didn't put any thought into it. He actually posted a tweet. He must have been either high on coke or drunk, because that dude's definitely got some fucking substance issues. He posted a tweet that he said he was a free spirit and he does things by the seat of his pants, and that he's hearing people take information and he's gonna make changes. What does that tell you? That tells you that these guys were hyping you guys up, telling you that they were gonna launch a service, and then they didn't put any thought into it. They just launched it, and it's the same shit as any other room. And he's posting alerts. He said, I alerted the room to dip by CVSI. When he says that's not an alert service, that sounds like an alert to me. So just be careful. He probably is a great teacher. Maybe you learn a lot from him. I don't know, but and I'm disappointed because there was a part of me that was interested in seeing what it was about, but no fucking way. He's a crook. What they did was so fucked up, and he's such a dick. So I called him out on it, and he responded to my tweet. I didn't even tag him in it, and he said, oh, like, he made some crazy comment about that's why he met with Sykes, because he's trying to clean up the industry. What kind of stupid blanket statement is that? Like, how is he trying to clean up the industry? Like, who the fuck is he? He's what is he, fucking SEC? Like, you know, he's a fucking idiot. You know, he's not cleaning up anything. He's fucking drunk and psyched. They're probably doing lines of coke together in a restaurant. You know, like he's not trying to clean up anything. He's just trying to get rich off subs. You know, and again, all those stocks that he shorts, you can't borrow shares. You're not gonna be able to short with him. So unless you got money like me and you can bankroll and get into a big brokerage where you can get the locates, or you're a non-U.S. citizen where you can get a Trade Zero account where you can get the shares because they're very easy to get with Trade Zero, you're not gonna be able to short those stocks. So just don't be spellbound by these guys. Just follow what I'm telling you. Trust me, I'm giving you the blueprint. Just follow this, watch stocks, and you can learn. I learned. I told you, I was in the chat room for 2 months. I learned nothing. I was barely in the room. It was just a waste of money and time. And I've gotten good because I trust myself and I have good mental attitude. All right. So anyway, hope this was well. Have a great night. Let me know. I'll talk to you soon.